Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to show you something which will literally blow your mind. I'm going to show you why this monthly candle close yesterday, the January close, is the most important candle you will come across in the next 4 years of this current cycle. And yes, I mean 4 years. I'm also going to show you why this candle is going to make you very rich within the next 12 to 18 months. And if you're of a nervous disposition, then I would strongly advise you now to turn this video off and walk away before I present this horror movie to those with a bearish bias. If you think the market is going to go back to 15.4k, then you may have to think again. You have been warned. Okay, so that's the end of my Shakespearean speech. But it literally explains what I'm going to show you today is something that nobody will show you and nobody has actually cottoned onto. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, make some notes on this one, and let's get cracking. Okay, before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. Please do your wider research before you make any important investment decisions. So with that out of the way, we're going to today be solely concentrating on this candle close. We've had 13 months of a terrible and brutal bear market down here. And yesterday we closed with this massive green monthly candle. I'm going to show you with this candle why in the history of Bitcoin, why this is very, very significant and what it's actually telling us of what is about to happen over here. I'm going to take you back to the beginning of Bitcoin here. This was the first 4-year cycle which ended in November 2013 over here. What's very significant is what happens at the bottom of a bear market in each of these 4-year cycles. So this first 4-year cycle, we already had one bearish period over here. But what this did was it set the tone for what was going to happen for the next 12 years. So what am I talking about? Okay, so when we topped out at the first rally that we got here up to June 2011, and this was followed by this bear market, something significant happened over here. And as you can see, we've had these red candles, and you'll notice one thing, that each of these red candles never closed above the high of the previous candle. So as you can see, when we topped out over here, this candle didn't close above the previous high of this candle, above this wick here. Similarly, this second candle didn't close above the high of the previous candle. Similarly for the next one here, and the next one, and this one here. However, as we can see, that this candle did actually close above the high of this previous red candle over here. And why is that significant? Well, what we found that as soon as the first candle closes above the high of the previous candle at the bottom of a bear market, that was the trigger for the rally before we get to the halving over here. Obviously, at this point, we had no historical context, so we didn't know this was going to happen. But we can take advantage of this now because historically, we know this is what happened here. And I'm going to show you why this is significant, this candle here. The first thing to note about this green candle is that it marked the end of the bear market phase over here, where it bottomed out at this point. And after this, the market did not go back and retest this level at all. The second most important thing to note about this candle is that when it closed and before the halving, the market was to go up from the close here to the close of this high candle here. We went up by 221%. And we need to make a note of that because that is very significant for what I'm going to show you today. So that was a 221% increase within the first cycle over here. And this happened at the bottom of a bear market before the halving about 12 months afterwards. So within the 12 months after this candle, the market went up by 221% over here. If we move on to the next cycle, you'll see a very similar development here. As you can see, the market topped out over here, but the bear trend, the confirmation was over here, that we're in a bear market. And you can see that every subsequent candle closed below the high of the previous candle over here. So if we start from here, this candle closed lower than the previous candle. This one the same, this one the same. Even this one here, although we went above on the wick, it still closed below the top of the wick of this candle here. And similarly to this, until, as you can see over here, until we got to this consolidation pattern. And this candle over here was the first candle after a 12-month brutal bear market that we closed above the high of the previous candle. And once again, the most important point to make here was that when this closed above the high of the previous candle, that marked the end of the bear market over here. And that was the low. And as you can see, we never revisited that again. And the second most important thing with this candle was that before the next halving, and from the close of this candle here, the market rose up to this point here by just under 200%. So if we say this is 200%, so the first part of the cycle was 221%, the next 4-year cycle started with this 200% increase before the halving and the end of the bear market in 2015. If we move on to the next cycle, we can see once again, when we topped out over here at 20,000, we went into another brutal 12-month bear market down here. Similarly, if you were to look at these candles, all of these candles never closed above the high of the previous candle until we got to this candle over here, which closed at around about 5,300. And before the halving, this candle actually led to a 160% increase in the rally before the halving here, which is obviously very significant because it seems to be following the same pattern as the previous cycle. So this is 160% from the close of the first candle closing above the high of the previous candle. Okay, let's move on to the next cycle, which brings us to the current cycle, of course. So once again, we topped out here in November 2021, and each of the subsequent monthly candles, none of them, including this one here, this may look like a bit of an illusion, but you can see this candle still didn't close above the high of the previous candle. And here we are now. So this close that we've just had in January now is the first candle after this brutal bear market that we've just had to close above the high of the previous candle here. So if you were to believe the charts and what's happened, please remember, this is not my opinion. I'm not telling you what I'm thinking. I'm telling you what I'm seeing in the charts. And the charts are telling us what's happened in the past. So if you average out the previous increases before the next halvings, you'll see that if you average them out, it comes to around about 200%. And those with a very keen eye will have noticed that the percentages seem to be going down. So even if you were to follow that, and we can have a look at both ways, either the average and where that would get us to, and the falling percentages, that maybe this one might be 140%, let's say. So if we were to look at those possibilities, that gives us some framework to look at what could possibly happen in the future in the next 12 to 16 months. Please remember, this is not financial advice. This is just me looking at the charts and trying to work out a pathway of where Bitcoin could possibly go and the probabilities. So when we look at the charts, knowing what the charts has done historically gives us that increased probability that what's happened in the past is no guarantee of what's going to happen in the future, but it gives us a pathway of where it could possibly go. And it increases the probability of actually reaching those types of goals based on a historical context than just thinking of it yourself and throwing a dart at a dartboard. So okay, so we're going to just ascertain what could possibly happen here. So if we think that this halving that's going to come, so this pink line is the halving that we expect around April 2024. So we've got about 16 to 18 months before the halving comes along. So what could possibly happen here? What can we map out based on the historical context that I've just shown you? So if we take the top of the candle here and increased it by 160% as per the falling number of percentages over the last 3 cycles. So that would take it to around about $60,000, where we would probably top out before the halving over here. But if we were to take the average, which is about 200%, then that would take us all the way up to exactly 69,000. And where have we heard that figure before? So that was the top of the previous cycle. So is it possible that we can reach the high of the previous cycle? Obviously, everything is possible, and we don't know with Bitcoin, but certainly it's food for thought that based on 2 insights from the past, i.e. the falling number of percentage increases before the next halving, and the average of those percentage increases, we come to those 2 figures here at 60,000 and 69,000. But more importantly, what this signifies, as per the previous cycles, it signifies that the bottom at 15.4 is now in. Now, I've always said that if you really want total confirmation, then you'd have to really wait until it gets above the 25,000. But the charts always leave a lot of clues, which are early signs of that already happening. And I've been showing you those signs over the last many videos if you've been watching them. And so far, it seems to have come true up to this candle over here. And this is why this candle is going to be extremely important, because it's telling you that the next 12 to 16 or 18 months before the next halving, we're going to be going up and having a rally at least once in this period over here. And if you were to do the Fibonacci retracement, I've shown you this before, from the top to the bottom of the first cycle, it came up to about 78.6. So in between the 61.8 and the 78.6, this is where we topped out over here. And in the next cycle, where we had a 200% increase, from the top to the bottom of that cycle, we came all the way exactly to the 78.6 here, before the halving again. And in the previous cycle, when we reached 20,000 here, once again we came to the 78.6 over here at this point. So you can see that the level between 61.8 and 78.6 is a critical level that we always seem to reach after the bottom of the bear market and the high before the next halving over here. And if we were to follow that principle, then this would give us at 78.6 around 49,974, which is 50,000 obviously. So that would give us a 50,000 from where we are before the halving over here. Now that can happen in the next 3 months, next 6 months, or 12 to 18 months. If you look at the last cycle, when we bottomed out here, we actually went up to the 340% increase from the bottom of this cycle within about 6 months. In June 2019. So this could quite easily, rapidly happen over here, and it will catch everybody by surprise, especially those people who think that we're going to come back down to this level here. The historical experience and record would suggest that this is not what's going to happen over here. Okay, we're going to leave it at that for today. I hope it didn't frighten you, and I'm going to leave you this quote from Einstein, which says that the measure of intelligence is the ability to change. And it follows on from what I said in the last video. Always give yourself the right to change your mind, to change your opinion, to change your direction, to change your mindset. You don't always have to be stubborn and stick into a particular narrative, because nobody else is going to play to your narrative, because what's going to happen outside of you is going to happen anyway. And I find the most intelligent people are the ones who are always in a neutral gear, always willing to have a look at the next important information and then to use that and take that into account accordingly. Okay, before we finish, I just want to bring something to your attention, and that is that at 7 o'clock UK time, which is 2 p.m. Eastern time, the Fed is going to be deciding on the interest rates, and the big consensus is that they're going to raise the interest rates by 25 basis points, i.e. 0.25%. Now, if they came in with 0.5% instead of the 0.25%, then I think you're going to find the markets are going to have a very big fall. Initially anyway. They may recover knowing that the biggest fall is now out of the way, and then we can look forward to lesser increases in the future. But certainly initially, I would expect a very big fall if the Fed decides on a 0.5% increase. But the consensus, the majority view, is that they're going to increase the interest rates by 25 basis points. So let's see what happens. You may see a lot of volatility in the market before, during, and slightly after the market at around 7 o'clock UK time. Okay, so if you found value in this video, then please do remember to like and subscribe if you haven't already done so. And if you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.